All right. Well, thank you for having me here. My name is Michael Konnert. I am the founder and CEO of Vizsla Silver Corp. And Vizsla is listed on both the New York Stock Exchange and the TSX Venture under the ticker VZLA. So it's my pleasure to be giving a corporate presentation update on Vizsla and how we are the next major and emerging world-class silver asset ready to meet the demand of this cycle here. So I'll be making forward-looking statements. Certainly believe the best is yet to come for the company, and certainly that's a forward-looking statement. So our vision is to become one of the world's largest single asset silver primary producers through exploration and development of the Panuco district in Sinaloa, Mexico. This is a district that we've consolidated for the very first time in modern history. Right now, we have the world's largest undeveloped high-grade silver resource. And our vision here for the next 3 years is to drive this project very rapidly through the development stage here and undertake the construction of this project and be in production in 2027. So our goal is to do this very cost effectively, but also while optimizing the exploration upside of this district as a whole. And the reason that we're doing this, of course, is that we believe that silver is a very important metal. We see, really an incredible scenario situated for silver here, where both the safe haven demand of silver as a precious metal, plus the rising demand of silver's industrial applications, is creating a perfect storm to see the price of silver rise very rapidly. And so, I think, if you look back to the last 3 silver cycles, actually, where silver made new highs and new cycle highs, it was always predicated on a move in gold first. And, as we sit here now in early April, that's what we're seeing. I think we're starting to see silver really catch up. So, I wouldn't be surprised to see silver really take off in terms of price. And certainly Vizsla is ready to perform and to meet that demand as it comes here for silver companies. So we are a standout silver discovery. As I mentioned, we consolidated the Panuco Silver Gold District for the very first time in modern history. Shortly after that consolidation, we made some very high-grade discoveries. Actually, some of the world's highest-grade discoveries occurred at the Panuco District here. And we've only explored such a very small portion of this project. So going forward, we expect to see new discoveries across this district. We have a team that's dedicated to driving this project forward. We recently hired what I believe probably the world's best mine builder as COO. Quite recently, Simon Smirlik. Simon comes to us from running COO Ausenco Engineering, one of the foremost companies in mine building around the world, with a special focus on Latin America. The rest of our team is uniquely experienced and situated to take advantage of exploring, making discoveries, and then also de-risking this project. We have an aggressive, low-cost exploration platform here. We are planning on doing about 65,000 meters of resource and discovery-based drilling this year. And as we do that, we expect to see significant re-rating potential. And we're targeting mid-2024 for initial PEA. And that PEA is situated in less than 10% of this district. And the company, is in very good shape here to execute. We have 100% ownership of this district. We've just made a new acquisition of another district to the north of us here. So we're really consolidating not only our project, but the Sinaloa Silver Belt that we operate in. And we have about $45 million in cash and zero debt. So just a quick view of our cap table here. About 230 million shares outstanding. Again, $45 million in cash. We're trading on the higher end of our range here, but I suspect that that range should break here soon, and we should see some new highs here for the company as we continue to de-risk the project. And we're doing this at a time where our average trading volume is actually increasing quite a lot, and we're actually seeing the New York ticker and the New York trading become the primary trading for the company, which is something that we've seen with other silver companies historically. It's a great sign that the share price should move higher shortly. We have a large universe of analyst coverage, all with the consensus buy all with the target price, well north of where we are here, almost 100% premium to where we trade today on an average. And I think, the analysts believe that the share price is going higher. Management and directors, we believe that the share price is going higher. And that's why we've been buying a lot of stock over the last few months here. And then over the last previous years, we've bought millions of dollars out of the market and in placements. Craig Perry, our chairman, put in about $4 million at a private placement at about $2.50 a couple of years ago. So our cost basis is quite high. Insiders, we own about 15% of the company here, which is an excellent sign. So insiders, Franklin Templeton, For Sale Capital, Eric Sprott Asset Management, these are the top shareholders of the company. And now I'll just kind of touch a little bit here on my background. So I'm the founder of the company, I'm the CEO of the company. I'm also the co-founder and managing partner of Inventa Capital. Prior to that, I had a cobalt company with Craig Perry, our chairman, that we transacted on within about a year of founding the company. That was a large success for our shareholders there. And then over the years, we've brought together some of the leading minds to run this project here. So our CFO, Mahesh, Simon Smirlik, COO, as I mentioned, formerly from Ausenco Engineering, Michael Pettingell, previously with Konnert and Hecla, Jesus, our Vice President of Exploration, probably the best situated person that we could find. This is essentially his backyard where we're exploring, and he has a PhD in the exact type of systems that we're looking at here. Fernando, country manager, director of projects, great team here. And I'll also touch on a couple of names on our board. As I mentioned, Craig Perry, you'd know him from Skeena, from NextGen, from ISO Energy, from EMR Capital. But we also have Eduardo Luna. And Eduardo Luna, again, very similar to Jesus Velador, probably one of the best directors that we could find for this company because of his experience at San Dimas. San Dimas is a mine in Mexico that's almost an identical analog to what we have here, except for it's a true billion-ounce district. Historically, it's produced a huge amount of metal. It's about 100 years advanced over where we are right now. We're about 100 years behind San Dimas. But Eduardo would probably be the most knowledgeable man of that project in the world. We also have Peter Megaw, who's our technical advisor, who you'd know from Vizsla Silver. And I think he'll be speaking on the project here shortly as well. So I just wanted to bring us, with that background, I want to bring us here to the project, and so everyone could get an idea of where we are. So we sit in the western portion of Mexico here, on basically off of the coast, and in the northern state of Sinaloa. Sinaloa is an excellent state to operate in here. It's an industrial state where you have a lot of industries around agriculture, mining, and manufacturing. And Mazatlan is a central area for this year. Mazatlan is actually a tourist city. It has an international airport. It has a port. It has rail that runs along the coast. And we fly into Mazatlan to get to the project. And from the airport, you can either take a left and go to the beach, or you can take a right and drive up one of the two excellent highways that crisscross our property here and give us access to the project within about 45 minutes from the airport. So infrastructure here is incredible, coupled with, again, that port, the rail, these highways. How you access this project is unlike most projects any of us have really ever seen in the industry. These highways literally overprint our main vein sections, and we drilled over 350,000 meters of diamond drills now without ever having to build a road ourselves, to give you an idea of the access there. And we're about 80 kilometers away from First Majestic's San Dimas mine. That's to the north, and it's a great example of what's possible here. They produced 600 million ounces of silver and I believe 8 million ounces of gold in about 100 years of commercial production. So, true tier one project there, 80 kilometers away on the same trend. We have 100% owned. We own these concessions 100%. It's truly district scale. This district's slated to grow as we continue to expand the land package here, but currently about 7,200 hectares. And we're continuing to explore and make new discoveries across this project. Now, we have a very large and high-grade resource. To give you a bit of history with this project, I first went down in early 2019, pardon me. We first went to this project in very early 2019. And over the course of that year, we consolidated this district. I worked with the various families. Basically, if you could think of this property map here being cut in the middle, the western portion being owned by one family, the eastern portion owned by another. And we worked with these groups to consolidate this district. And we had a large option payment we entered into, which was about $43 million US. Everyone thought we were crazy because we were a $20 million market cap company. But we were convinced that if by consolidating this property, we would unlock some of silver's best exploration ground. And that's exactly what happened. In late 2019, we announced the deal. In 2020, about 6 months into exploration, we made the discovery of Napoleon. And it was one of the top drill results in precious metals that year. It was incredible. 6 meters of 8 kilograms of silver equivalent. And then from that discovery, we continued to drill along Napoleon, along strike on these epithermal veins that run north-south. And then later we made the discovery of Copala. And Copala was an absolute game changer. Copala is probably one of the most important new discoveries in precious metals in many years. Right now it's a mile long, it's 10 meters thick. The average grade is well over half a kilo. And it's one of these structures that, very lucky to come across. I think is going to underpin a huge amount of our economics going forward and be a real cash cow for the company. So Napoleon, Copala, these are our main structure areas. They all sit within about a 4-kilometer radius within the western portion of our district here in that shaded ellipse. So it's so important to understand that, these veins, although they're the world's largest undeveloped high-grade silver resource, they sit, so close to each other. They sit underneath the highway, so the access is incredible. And the grade is incredible as well. So if we just look at our indicated, we're sitting at about 156 million ounces of total indicated silver equivalent ounces. Now, when we talk about silver equivalent ounces, we're talking about precious metals here. There's a very small base metal component to some parts of Napoleon, but by and large, this is a precious metals vein field here, precious metals project. And, it's silver primary, about 60-40 silver gold, but the grade is very high. So I'll just point out here at Copala, on average across our Copala structures, we're looking at 580 grams silver equivalent. In gold terms, we're talking about 2.5 grams gold and 385 grams silver. Now at Napoleon, we have some very high grades here as well, but it's about half a kilo, about 421 grams and half a kilo across both of them. So it's very nice grades there. And then in Inferred, we're looking at about 170 million ounces of silver equivalent, and the grades are quite high here as well. On the equivalency basis at Copala, 515 grams, and at Napoleon, about 383 grams. Total Inferred, about 433 grams silver equivalent grade. So, in total, this is well over 320 million ounces of silver equivalent. But in gold terms, we're talking about 2 million ounces from indicated and 2.2 million ounces Inferred. So well over 4 million ounces in gold terms here. Again, this is a silver primary, but has a very strong gold credit as well. Now we're discovering these ounces for very good price here, very good cost, I should say. US about 32 cents an ounce discovered. And, our current initiation right now, what we're doing here, driving the project forward, is to do more indicated drilling. So, right now, as of the January resource, 48% of the resources are classified as indicated, but I expect that to continue to grow. So this puts us at the top of our comparables in the undeveloped category here, both in size and grade, and so saying grade and contained ounces. You can see quite a bit higher than the rest of our peer group here. And certainly in size, if we were to put indicated and inferred together, it would absolutely dwarf the rest of our comparables. Really, the best comparables are Silvercrest Las Chispas and Meg's Juanicipio, as well as Aya's Gounder. All of these are billion-dollar companies. So we see serious re-rating as we move to de-risk these projects into production, like Silvercrest, Meg, and Aya. Now I do want to highlight here the scale, and as I said, this map I think will continue to grow as we continue to make acquisitions around this district here. But as it stands, it's really the size of the island of Manhattan, whereas most of our resources sit in the lower East Side kind of financial district area. Now, if anyone could think about walking, the whole length of the island of Manhattan, it's an enormous piece of land, as is our project here. And we've only explored such a very small portion of it here. About 10% of the known vein strikes on the property have been explored. Certainly there's areas here that no one's been to, despite this being a project that dates back 450 years to the Spanish. Originally these mines were discovered by the Spanish, and since then have been mined on a very small scale. But now, as we continue to grow here, we have our core piece of the project in the west. We're going to continue to explore and de-risk the project as a whole. Now, I'll skip over some of the details on the specific veins and just talk about this property map here. I think this is much more important to focus on. In the west here, we do have our center of mass. Again, that's the area that we're moving forward into the PEA. Midway through the year here, we're expecting to put the PEA out as a de-risking exercise. It'll demonstrate essentially what it's going to cost for us to put this project into production. Some early estimates based on what we've seen with our analysts show that this could very well be, either the top 8, or within the top 8 silver equivalent producers in the world in terms of size, annual output. So the potential here, the size of the prize is very large here for Vizsla. But again, that's just such a small portion of the overall district. That's the western portion that we'll put into production, de-risk through the PEA into feasibility. But there's other centers of mass occurring here that we see through our exploration, and all of the magenta dots represent over half a kilo silver equivalent. And you can see in the north central area, there's a center of mass occurring there. In the center area south of the highway, we see another center of mass. Southeast here at La Camelia, San Dimas area, we're very excited about what we see there. And then the whole east is really relatively underexplored, despite seeing a lot of surface expression of veins in our own sampling that have some very compelling drill targets. So this map here is massively underexplored, but despite that, we already have a very meaningful resource in the west. So the way that I look at the project and the company going forward is that we're simultaneously de-risking and driving forward the western center of mass while exploring for new inventories across this entire district here. And I think the potential for Vizsla to continue to make new big discoveries is very real here. So our key de-risking initiatives for 2024 include a bulk sample test mine, which is something that we're permitted for. And that's going to help us de-risk the Copala and Napoleon veins that are really so important to our progress forward. And that's an underground development, and that's planned for the second half of 2024. This development will be useful for future mining operations. It allows us to not only get our eyes and our hands on the veins, make sure that it coincides with our drilling here, that we can de-risk and make sure that our drilling really is given that confidence that we need here to move forward. But it also allows us to have early access to the veins, which will allow us to bring material above surface. And that material we can use to stockpile and run through the mill in the future. It also decouples the risk of mine production with processing. So bulk sample test mine, very important de-risking opportunity for us here. Now we have tight space definition drilling planned on Copala and Napoleon as well, and that would be on 12.5 meter centers. And that gives us an additional level of ore definition for test mine success. And as we move forward, we're already quite happy with our metallurgy. We're looking at very positive recoveries in the 90s for silver and gold here, but we always continue to look at it as a continual process and something that we can always optimize. So we are looking at how we improve the flow sheets here for the core areas. So again, just to think back of what we've accomplished here. So we went down and spent a year. I spent a year working with the families to consolidate this district for the very first time in modern history. We did that. We made large high-grade resource discoveries, and we created this very large center of mass in the west. We've de-risked that now with initial metallurgical testing, which has returned high precious metal recoveries for Copala, Napoleon, and Tajitos. We own 100% of this project, so we successfully consolidated this district with 100% ownership. And we've completed, an industry-leading 350,000 meters of capital-efficient drilling on this project in a few short years. Now, again, we did that without ever having to build a road, to give you an idea of that infrastructure. So really incredible what we've been able to accomplish in a few short years. And then that drilling, of course, has created many new high-grade discoveries. Now, what we're doing right as we continue to de-risk, I talked about the test mine, so we're undertaking the early work on that. We're continuing to optimize metallurgy. We're continuing to drill across this project. But I think what's so important is that we need to continue to show the blue sky of discovery. And so we're doing a lot of exploration work centered around that, mapping, geophysics, and later in the year, we're planning to do more discovery drilling across this district. Now, we've done initial geotech and hydrological studies and baseline environmental work, which will all feed into the PEA, which I think will be a surprise to the market. I suspect that the PEA will actually be something that will be cataclysmic to the project here to see share price improvement as we move forward. And we're expecting that in mid-year, halfway through 2024 this year here. And as we continue, it's likely that we do a resource update. Now, why all this matters is because we believe that we are criminally undervalued when we look at our peers. First of all, we believe that we're developing a very competitive business. The nature of these types of districts are billion-ounce districts that operate at very low AsEq and create a huge amount of value for shareholders. So fundamentally, that's what we're driving towards. This is our business plan, is to become one of the world's largest single asset silver primary producers at a time where that really matters, where people really want silver, they really want gold, and the prices should rise. But as we do that, we can look at our comparables on several bases. One on an EV per ounce basis here. If we look at Vizsla trading at about $1, just under $1 enterprise value per ounce, whereas our peers in production, single asset, silver primary producers in Mexico trade, much higher at more than 4 times, the enterprise value per ounce. But we can also look at this on a market cap basis, and the bottom chart here is U.S. market cap. You could see Vizsla sitting today around 225, somewhere up, likely actually a little bit higher on today's price, closer to about 300 million US, where we see Meg, Aya, and others, trading much higher. Actually, this is a bit of dated information here, despite this being the April presentation. This was done on a quarterly basis. So these prices would be well in the billions right now. We're trading, about a third to a quarter of what our peers trade. But, as we continue to develop and, what I believe will become makings of a billion-ounce district with a very likely high margin operating mine here at Panuco, we can continue to grow organically through discovery and development in our district outside of our center of mass. So we truly could become one of the world's largest single asset silver primary producers. And we see this routinely trade at many multiples of where we're at right now. So I suspect that Vizsla is one of these companies in the silver space that can create a huge amount of value for shareholders. We have multiple near-term catalysts, including that PEA, including that discovery and resource drilling. We have huge discovery potential. We're vastly underexplored, with only 43 of 158 targets identified having been drilled. We have new exploration technologies that we're applying to the project this year. And as we're successful, we de-risk the project. We use that existing infrastructure to move very rapidly into production. And the key is that we're well financed. We've recently raised money, so we're not looking to raise any more money in the near term here. And so I believe that there, should be a lot of potential for the shares to perform very well in this type of silver market. So again, my name is Michael Konnert, and thank you for your attention here in this presentation.
So thank you, Michael, for the presentation. Could you tell us about yourself and your career?
Yeah, so I'm a very passionate entrepreneur in the mining space. My background is commerce. I studied commerce at Royal Roads University in Canada, and from that, I got involved on the business side of mining with a few different companies. But my first kind of internship was with Pettingell, which is a large gold producer in Canada that was acquired by Newcrest. And really, I was wanting to learn about the industry, so I was just willing to do kind of what was asked of me at that company there. And I went from there to a few other junior mining companies and a family office, and was really trying to just understand how the different components of the business work. And that all kind of accumulated and ended up with me meeting my business partner now, Craig Perry. And I was working, taking companies public and financing companies when I met Craig, and I had a deal that had fallen over. As many good stories start, a little bit of failure is helpful to understand kind of what not to do. And I was a bit discouraged by this deal falling over, and I went to Craig for some advice. As he agreed to mentor me, and he had just moved to Canada from Australia, working on his uranium businesses, NextGen and ISO Energy. And, we were talking about commodities that we liked, and it came up that we were really both interested in cobalt. And so he said, okay, Mike, well, why don't you go out and start a cobalt company? I'll back you financially. And we went out and did that. And I acquired a project called the Little Gem in BC. We ended up staking some more ground and consolidating a district there, which we sold as a private company to an Australian listed company for about $15 million. And that turned out to 4 or 5x after that in share appreciation. So we had a very small group of investors that we went to raise some outside money outside of our own. And, that group made well over a 10x in their money in about less than a year. So it was a great outcome. And then from Cobalt One, we started Inventa Capital and incorporated both Inventa Capital and Vizsla on the same day.
How have you built the management team and also the technical advisor team at Vizsla?
Well, it's quite fortunate because it's very hard to build a competitive or industry leading technical team, advisory team when you don't have the goods. But fortunately, as Vizsla Silver continues to improve and we make these discoveries, we've been able to attract some very strong talent. And originally it was myself, Craig, and Simon Smirlik, who's our COO. Simon at the time was a director, not our chief operating officer. He's just recently joined us as chief operating officer. So we had a very strong core group there to start, which was which is not typical of a small company in the junior mining space. So we started with a bit of strength, but as we continued, we were able to attract some very strong talent. And I like to think some of it has to do with the culture that we've created, where we're a unique company in that sense, but really, it's the quality of the asset and the potential and really the business plan of what we're trying to do here at Vizsla Silver that attracts such good talent.
And so could you explain your and also Vizsla's affiliation with Inventa Capital and the synergies that you get from it?
Yeah, so Inventa Capital, which I'm the managing partner of, and Vizsla Silver, they're connected in a number of ways. Early on when we started, we were able to save a lot of money by sharing services across different companies. So Inventa Capital is really an incubator, but also in a sense a service provider where we share back office support across a number of companies, and therefore lower the burn for companies, and allow us to use our money for what it's supposed to be, which is exploring properties and de-risking assets and creating value for shareholders. So the synergies happen on that front, but also it allows us to attract almost a brain trust of very talented people. And it's a platform where none of these things should really happen in silos. You really need to talk about what you're doing. each of our companies have very talented people affiliated with them, so we get a lot of good technical feedback as well, from the affiliation with Vizsla Silver. And it also allows us to, it gives us kind of a name brand, I think, to raise capital with as well, and that helps.
But Inventa Capital doesn't actually hold shares in Vizsla.
No, it doesn't. No, it's better, for structuring for the individual. So the shares. So myself and Craig, we have large shareholdings in the companies.
Awesome. And how many shares do you hold of Vizsla?
So I think I have just over 2.3 million shares of Vizsla.
Perfect. So approximately 1% of the entire company.
Yeah, exactly. Yeah, I unfortunately, when I started the company, I was I put all the money I had into it at the time, and then I ran it on my credit card for a while, which was a bit high risk when we were trying to acquire that property and making payments and things like that. But I didn't. I wish I had more to put into it, but I've been a steady buyer of the stock over the years. But very confident that my 2.3 million shares, will be worth quite a lot here as we move forward.
Michael, thank you for being here. Could you tell us about yourself and your career, as well as what made you join Vizsla?
Yeah, absolutely, and thanks for having me. I'm a geologist and an engineer with a background in economics. Started my career with an environmental consulting firm, and then moved on to work with Hale Gold Mine down at their project in South Carolina. It was Remarco Minerals, was a Canadian firm. They had the project. They ended up selling to Oceana back in 2015 for about $650 million. I then went on to work for Hecla at their Lucky Friday unit in Idaho. So moving from open pit, pre-production disseminated gold to underground producing silver, lead, and zinc. And I worked there for a few years as an exploration geologist before making the transition to the capital markets. I went back and got a master's degree in mining engineering, and then joined Canaccord Genuity as an equity analyst. I was there for about 5 years, covering the junior precious metals explorers and developers, a few base metal companies, but really the important thing is the early stage names, those that might even be pre-resource. So getting a sense of what that value could be. I ended up launching coverage on Vizsla. This was back in 2021. It would have been. I put a $4 handle on the file. We immediately started expanding the results at Napoleon, and then made the discovery of Tajitos, our second major discovery. And for me, the writing was on the wall. So I effectively called up Mike Konnert, our president CEO, and said, "Hey, I'm working with you as on a part-time basis as a covering analyst. How about I hop over and I come over full-time and we institutionalize this story?" And that's exactly what we've done. We now have almost 60% institutional ownership on the file, and have proven that we have access to.
How many shares of Vizsla do you hold?
Personally, I've got about just over 60,000 common shares, probably another 50 or 60,000 restricted share units. And then I've got about 1 million options, and that's my real incentive. There is my options package.
Then, by the way, what's the average? What's the average strike price on the options?
Probably closer to $1.60, $1.70. Some of my first options were at much higher price levels. When I came on in 2021, we had just completed a very large raise at $2.50. So I think that was like close to $80 million raise at that time. So there's lots of individuals, including our chairman and our founder, CEO, Mike Konnert, who have shares at much higher price points into that 250 range.
Thank you for being here today, Peter. I think by now most viewers know who you are, but I think it will serve us well if you could tell us who you are and also about your career.
So I'm Peter Megaw. I have a PhD in economic geology, and I've been exploring the world looking for large, high-grade silver, lead, zinc, copper, gold deposits for about 45 years now.
Excellent. And could you name your... you have been involved in several companies and also in several major discoveries. If you could name some of the companies that you have worked previously for or founded, and also tell some of your discoveries.
the most important company that I was involved with co-founding was Mag Silver, and we've made the massive discovery at the Juanicipio project in Zacatecas, Mexico, which is now being operated in partnership with Fresnillo PLC. We just put out some production numbers yesterday where we've produced a little more than 4 million ounces of silver this quarter, plus a bunch of gold, lead, and zinc. So that's becoming one of the world's most important silver mines, and it's got a very long mine life ahead of it. So it'll be producing like that for a long time. I was also involved with making the discovery of the Platosa deposit for Exelon Resources, Cinco de Mayo for Mag Silver. I'm involved with Reyna Silver on the Medicine Springs and Griffin Summit properties in Nevada. With Mag Silver, the Deer Trail property, their Larder property in the Abitibi, New Pacific with their Silver Sand and Carangas properties. Minorum Gold, I also co-founded with the project they've got in the Alamos district in Sonora. And that's enough for now.
Let's move to Vizsla. So what attracted you about Vizsla Silver?
Well, it's interesting because Vizsla is in the Panuco district, and I've actually worked in the Panuco district off and on since 1980. And in a very complex and roundabout way, Panuco was involved in our founding Mag Silver. It was involved in the founding of Minorum Gold, and it's the flagship property for Prismo Metals, which is actually how I got to Panuco and Vizsla this time around. That the Palos Verdes property, which is one of Prismo's flagship properties, is an inlier to Vizsla's property in the district. It's 750 meters of strike length of what looks like the top of a typical Panuco-style high-grade epithermal vein. We were exploring that. Vizsla hired a new VP of exploration, Jesus Velador, who actually I've worked with. I've known him since he was a kid because his father used to work for me in Chihuahua. But we also worked together at Juanicipio, and we've remained good friends. And as he went through his schooling at University of Texas at El Paso and then New Mexico Tech. So the folks got together and said, let's put together a combined district exploration team to bring the experience and skills of and the properties of the two different groups together, and see if we can, do a more efficient district scale exploration program than we're doing. And so we've now been doing that for about a year and a half, and it's great fun, and it's moving forward very nicely. I was just down on the property 3 weeks ago.
In the beginning of the year, you did a larger raise. So what's the current cash position and working capital position of Vizsla?
Yeah, cash position, we're sitting with right around 40 million Canadian currently in the bank. In terms of working capital, including your IVA receivable, it's probably just north of 50 million Canadian. But I think it's best to just think about the 40 million CAD and how long that can potentially take us. We burn close to about $1.5 million a month right now as a company, Canadian. We're trying to get that down closer to $1 million. Because we really want this capital to last until delivery of the feasibility study, which we're expecting to publish in mid-2025. So essentially, be judicious as possible with our time and our capital to make this current 40 million last all the way through delivery of that FS. And at that point, you're really talking project financing. So taking on debt and less dilutive forms of financing.
Then, so regarding costs, so what's your all-in drilling cost per meter?
Yeah, all-in drilling costs right now close to $150 US, and that is all in. So you're talking assays, G&A, everything that would get taken into account per meter drilled to get those results back. If you're looking at mainly just direct drilling, it's probably closer to $110 US per meter. but we have very low drilling costs. And the reason we were able to keep them so low, all of the drill rigs that we had on the property, basically since discovery hole in 2020, have been man portable. So that means that they have no tracks or tire mounted rigs. There's no tracks or tires that can move them around. This means that the rigs are smaller. So this benefits us in a couple ways. We don't have to permit a lot of infrastructure for roads. We don't have to build very large pads. Moving the equipment, we have an army of laborers that pick up every piece of the drill component and move them up the hill to the next location. However, this comes at a price in terms of depth potential, right? With a smaller rig, you don't have as much torque and you can't get down as far as the mineralization goes. So our rigs have a depth extent, drill hole length of, call it, a kilometer. And so when you talk about vertical depth, our average depth is about 450 meters across the resource base in the west of our property. But when you're drilling at angles, some of those angles, rise over run, you're going to add more meters to the actual drill length. And so, we are reaching the depth extent of what we can really test with these drills. At a later date, when it's cheaper, we'll get underground and be able to drill these underground targets and these extensions at depth much more cost effective.
Excellent. We will speak more, in a minute. Speak more about your exploration campaign. But so, how many warrants do you have outstanding, and what is the strike price and expiry date on those?
Warrants, we've got. I want to say it's about 15.5 million warrants. Largely, those are tied to the financing we did. It would have been November of 2022. So they have a strike price of $2 and they expire November of this year. I think there's a few other warrants that are from an earlier round that have a slightly lower strike price, but I want to say your average strike is close to $2 for those 15 million warrants, and basically they're close to, if not in the money right now, which is good, or just out of the money. So that has the potential to bring in some extra capital.
So could you walk us through the history of Vizsla and how you have consolidated the Panuco district?
Yeah, so we spent, I was introduced to the project actually through someone that was involved in the cobalt company that we'd started. And this person was familiar with someone who was down in Mexico working on this district here. There's some Canadian prospectors that were quite interested in what was happening at this Panuco district. And it's actually not that surprising because, if you fly to Mazatlan from Vancouver and in the winter, there's actually pretty consistent flights, direct flights. So it's a tourist destination where a lot of people from Canada go and vacation. And if you just drive a little bit into the hills from the beach, on these highways, you're driving across this incredible mining district. And, I had to think that there's probably been thousands of geologists that drive from Mazatlan to Durango City, which is this highway connects, over the years, and they would have driven right over our hundreds of millions of ounces of silver equivalent. You can see the mines, you can see this incredible alteration cap. And so it's not surprising that there were, people down there trying to acquire this property. But the problem is that, the vendors, they knew what they had. So they had these very high asking prices for the property. And there was a gentleman down there that was working on this. We were introduced to him. We took a few tours, and, we were just blown away by what we saw. And, that kind of started me working with that prospector, and then, doing the deals with these the property vendors there, the actual Mexican operators. But everybody, as I said, everybody thought we were crazy. It was two halves of a district. There was a mill. There were some environmental liabilities, things like that. And so there was a lot to overcome. And at the time, we were maybe a $15-20 million market cap company that had just entered into an option to acquire a $43 million property, US, and with no resource. So everyone said, "Oh, this is nuts." And it was quite an uphill battle until we made that initial discovery, and then the share price went from 15 cents to $3.50 in a very short period of time. And that discovery created a lot of value for many of the people that believed in us early. We were able to raise, to date, we've raised, what would it be, about $250 million, $250 million. But we were able to raise our first few rounds of institutional money, which was over $100 million. And we paid off, that option. We own the property 100%. And then we continued to drill, at an incredible rate. At one point, we had 13 rigs on the property. So we went from, no one really a select few people believing in the potential of what we had, but thought it was a challenging option, to then, bringing in institutional money and paying off the property in a very short period of time. And then, creating a really, I think probably a leading investable silver development company out of the project.
So could you explain the geologic setting of the sort of the Panuco-San Dimas trend?
So Panuco sits in the Sierra Madre Occidental silver gold vein belt. So the Sierra Madre of Mexico, the Western Sierra Madre of Mexico, is one of the world's largest volcanic belts, especially of rhyolitic composition, rhyolite just being the extrusive equivalent of a granite. So highly evolved, typically associated with silver and gold mineralization. Lots of veins that were deposited at about the right time, at high levels in the crust at the right time. So there's been enough erosion to get down and expose many of them, but not erode them away. And so Panuco is right in the middle of, it's right on Main Street as far as the Sierra Madre epithermal vein belt is concerned. Between historic productions, probably around 300 million ounces of silver, add in another couple of hundred that Vizsla has managed to block out. You're now talking 500 million ounces of silver. Not very far away is the Tayoltita district, which is operated by Primero. That district has produced in excess of 1 billion ounces of silver and close to 100 million ounces of gold. So it's a really good address as far as that belt is concerned. And to me, the most exciting thing about what's unfolding in the Panuco district is that here's a district that's been produced since the early 1600s, and we can still go in and find untouched high-grade veins where people have been mining for 400 years. And that is really, that is my favorite scenario anywhere in Mexico, because Mexico has produced 25% of all the silver mined in human history. Of the world's 15 deposits that have produced more than 1 billion ounces of silver, 8 of them are in Mexico. And, if we can keep going with the rate of discovery that's been made in Panuco over the last 4 years, we might be able to get Panuco to join that billion-ounce club here within the geologically foreseeable future.
Vizsla Silver has consolidated the Panuco district, and they've also bought, quite recently, 2 new districts, north and south of Panuco. Could you summarize everything that you know of both the Panuco district as well as the 2 new ones? Previous history of mining, exploration, types of deposits, mineralization, etc.
Well, as I say, I started working in the Panuco district in '80, and we looked at a lot of the deposits around the neighborhood. Essentially, the same kind of geology continues north and south. Most of the veins in the district sort of have a north-south and an east-west trend. There's 2 different vein sets. And so these new properties that Vizsla has acquired are simply following those regional structural trends in both directions. And there are historic mines along those trends in both directions. Haven't really been on people's radar very much because they were family-owned, small operations, but very high grade, with really good potential to be made a lot bigger. So it's really, I haven't decided yet whether it's simply our definition of the Panuco district is too small, that actually it's much bigger than we think, which would expand it potential dramatically, or whether we're just looking at multiple mineralization centers along a big regional controlling feature. We don't know that yet, but either one would be very positive for what we're doing.
Could you explain the geologic setting and what kind of system Panuco-Copala is? And also, how does it vary between each deposit? You got Copala and Napoleon, and each of them consist of separate veins.
So look, this is a low to intermediate sulfidation epithermal deposit. It's rich in silver and gold, and it's hosted in a broad extensional environment, a regional extensional environment that's situated perfectly on Mexico, Western Mexico's Sierra Madre Occidental. So this Sierra Madre mountain chain hosts a litany of projects, porphyry projects, epithermal deposits, orogenic deposits, all these varying styles of precious metal deposits. What we have here, though, is really well known to Mexico, where it's vein-hosted silver primary epithermal structures, right? And so you've got quartz veins that are coming up through volcanic material, and the volcanic material varies in age, but it's quite young on a broad scale. And essentially, you've got mineralization that is precipitated out within these quartz veins, these quartz structures. When you're on one of these structures, because of that extensional environment, you've had basically opening up and then filling with this mineralizing fluid. You've got areas that are really well prepared for this precipitation and inherently deposition of precious metals. And so that's exactly what we see as we march across our district. You'll see that we've got areas that are uplifted and down dropped as you march, call it west to east across the district. Those areas that are uplifted, they have a higher degree of erosion. And this is exactly what we see at our Napoleon deposit. And because epithermal structures have a degree of zonation to them, the higher up in the system you are, the less temperature and pressure. That's where you're going to get the deposition of the gold and the silver. As you get deeper in that epithermal profile, higher temperature, higher pressure, that's where you're going to get the base metals precipitating out. So your lead, your zinc, higher temperature, higher pressure, you'll get copper. And so when we look at Napoleon, it's uplifted. And so you've got a level of erosion. And so what we're seeing is more base metal values. But if we step further to the east, just about 500 meters, that's when we run into the Copala structure, which basically has been down dropped and therefore preserved all of that mineralization. And there's been very limited amounts of erosion because of it. So in that case, we're dealing with really true precious metal grades here with very low base metals, if at all, and no massive sulfides that have come over and overprinted or washed out any of the precious metal mineralization. So what we see throughout the district is a series of uplifted and down drop blocks with lots of epithermal veins running through, typically in one of two orientations. Your northwest, call it southeast, is our primary orientation, and that's what we see at Copala and Napoleon. And these structures vary in their overall width and geometry. Mostly, they are subvertical in nature, right? Copala bucks that trend as it's got some near flat lying up to the north and then kind of dips down. They also are quite broad, as mentioned. Napoleon's about 3.5 meters wide, whereas you look over at Copala, it's 10 meters wide on average for the entire length of the structure, which now has been traced to just shy of 2 kilometers in total lateral strike length. Another important note about our structures and our mineralization, I think we've got 11 veins so far that have been put into the resource base. All 11 veins are right at surface, and they're all open in every direction. We have not closed off any mineralization in this property, and it makes us look like absolute rock stars because we continue to drill along strike laterally. And again, these man-portable rigs, that's how we want to drill. We're not going at depth yet. All of that depth potential still is open, but we can cost-effectively march along strike laterally and continue to grow the footprint of this mineralization. So 11 structures, all at surface. The average thickness of this type of vein in Mexico is closer to 2 meters. And so when I talk about Napoleon being 2.5 kilometers long, 3.5 meters wide, well, that's much larger than your typical epithermal vein. And then, of course, when we look at Copala at 1,800 meters long and 10 meters wide on average, it really does buck the trend and highlights why not only Copala but Panuco as a whole is so special. And so this is really just the beginning of what we've got. We know that there's been past production in the central portion of the district, call it 7 kilometers further to the east. Our district in whole is about 14 kilometers long by 7 kilometers wide, so it's quite large. And the area that we're working on, that we've wrapped our material resource, about 320 million ounces of silver equivalent, is represented in just a 4-kilometer radius in the southwest. So really just early days here for us. And most of the ground has never been drilled. In fact, this district, when we acquired it, it never had a geologic map. And that is exploration 101. You go out and you do your mapping and sampling to fine tune where you're going to actually drill and spend. That's the biggest expense in any exploration program, is that drilling expense. Excuse me. So to understand and have real sound science directing you to those targets is of the utmost importance to be capital efficient. Well, we've had such amazing success based on historic workings that we never even used the map, right? We had maps of historic workings in old infrastructure that we essentially took and used to vector to new mineralization downtrend or a long plunge of those historic workings. Really, the thesis was these old timers never had the pumping technology. And when I mean old timers, the discoveries that we have in district date all the way back to the conquistadors. So, 450, 500 years ago. But there's never been any mechanized modern exploitation or production in this district. And so here we are as a group for the first time in history that has can systematically explore this district on a consolidated basis with modern technology, right? And so the pumping technology was a very key point. These old timers could never go below the water table. So drilling below where the paleo water table is, that's what led us to the discovery of Napoleon. That's what led us to the discovery of Tajitos. We then continued to step out and expand and have made novel discoveries since then, such as Copala and recently La Luisa. But that's exactly what the original thesis was. And with the mapping efforts, we've got 4 geos in the field full-time mapping ongoing. We've now mapped 65% of the district, and we continue to find new workings, historic adits, and drill targets much faster than we can drill test them.
What similarities and also differences are you seeing if you compare Panuco to First Majestic's and Dimas?
Yeah, great question, and that is something to touch on. That is the direct analog from a geologic perspective. In our presentation, we highlight a few things that are regarding the overall mineralizing style. It's epithermal structures here. We highlight that it's got the same age dating or similar. We did determine that our rocks are slightly younger, but you're still within that typical age, call it gap here, Cretaceous to Eocene volcanics, and again, polymetallic, vein-hosted, epithermal, low to intermediate sulfidation. From a geologic perspective, this is the carbon copy. It's a long trend to the north, about 80 kilometers. Big difference is where it is in Durango versus Sinaloa. You're up and over the hillside into, call it, more arid terrain, and it's more remote to get to San Dimas. So you do need some helicopter fly in, fly out for rigs. It's a 4-hour drive down dirt roads once you're there. Panuco, it's located an hour drive along the highway from the coast. You could not ask for better access to infrastructure. We've got 2 highways that run through our property, and we've got high tension power that also just runs parallel. So an excellent, excellent way in terms of infrastructure. San Dimas has been in production for 150 years commercially. Over that time, it's produced right around 1 billion ounces of silver equivalent. So you could call it close to 700 million ounces of silver on top of 11 million ounces of gold that has been produced over that 150-year commercial mining period. Again, Panuco has not seen any years of commercial production. Small-scale artisanal mining has occurred for the past 100 or so years, but nothing mechanical and nothing mechanized and commercial. So when we look at what it could be, that's the way we like to compare San Dimas. It had very thick, broad structures, as well as some call it more Napoleon-esque, 3.5 to 2 meter wide. And I suspect we're going to have the same. And the fact that we've discovered Copala, and we know this to be true at San Dimas, some of those big discoveries were made, but they weren't able to fully appreciate and understand the scale of the mineralizing system until they were underground, until they drilled a tunnel, and then they left no stone unturned. And we expect to do very much the same thing at Panuco once we're in production. It's all about getting to cash flow for Vizsla right now at Panuco.
So could you walk us through the drilling campaign for this year? How many meters do you expect to drill? How will you distribute them? And would expansion, infill, and also some regional greenfield drilling?
Yeah, absolutely. I'm going to jump to a different slide for that question. I think this one's a bit better. This slide is showing the overall district, where our resource base really is in that purple ellipse down in the lower left corner of the slide, as well as all of the sampling and mapping that we've done to date. So what you can see is in the central area there, we've got 2 small satellite resources. You can see my cursor hovering right here. Maybe I can annotate with this. Oh, maybe not. But you can see here we've got a small satellite resource at San Antonio, and then another one up northern here at Animas. These are small satellite zones, but you can see there's a host of high-grade samples that we've taken. Very limited drilling has occurred here, and we will look to go and follow up and expand those resources. As I mentioned earlier, there's multiple layers, and I don't know if we were recording at the time, but there's multiple layers of exploration potential with Vizsla, not only in our district here, but with our growing portfolio of assets. And so if we look at Panuco here alone, well, we've got that near-term potential where the PEA is going to be centered. And that's what's denoted here by this purple ellipse. So when we talk about this year's drilling, 65,000 meters is what we've come out to the market with at the beginning of the year. Half of the drilling is going to be focused within this purple ellipse. And really that half of drilling, so call it, just over 3,200 meters of drilling, or 32,000 meters of drilling rather, it's going to be completed in the first half of the year here. So almost complete with this program. And it's focused on delivering that PEA. So small extensions of known resources, infilling of high priority areas to complement conversion into higher confidence categories, as well as tight space definition drilling. We've got a very tight spaced on Copala program. It's about 12.5 meter centers. Again, this is all to set us up and de-risk further for our test mine program, our bulk sample, as well as future delineation of reserves. So moving from a resource base to your higher confidence reserve base. Now, you need economics to announce reserves. It's not just a tight spaced confidence on your drilling. You also need those economics, but that's what we're marching towards with this PEA. So it's just going to be that we're just going to be that much further advanced when ready to announce the feasibility by undertaking this program. And the last call it de-risking initiative and meters that are focused in this purple ellipse is some outstanding geotech drilling, which is a very minor component. When we look broader at exploration potential in the second half of the year, and again, this is just focused on our main Panuco district here, the contiguous land package that you see on this page. Well, we've got those satellite zones that I've mentioned that are here in the central, but more importantly for us right now is these higher priority new targets. Now, I've mentioned that we've only been able to map and sample 65% of this district, but a lot of what we're uncovering here in the east is very, very exciting. We're seeing historic workings, historic adits that we've identified through a LiDAR survey. We're matching those up in the field, marching through the jungle to find them. They're much easier to find on a map than in the field. And then we're sampling them and we're finding high grades with good surface expression. But also, and more importantly, we're seeing that structural preparation that you need so much in these types of systems. Our district, the mineralization is not lithologically controlled, meaning it doesn't really favor any particular rock unit. Although mineralization, we tend to see it more in our diorites, it is also located in our andesites. It's in our rhyolites. It's in everything, right? So mineralization is agnostic largely, but what it is controlled by is structure. And so when we can find these structural corridors, as mentioned, those uplifted and down-dropped blocks, those are better areas to really hone in on for call it an epicenter of new mineralization like you see down here in the southwest. Again, 320 million ounces just within this purple ellipse. What we're hunting for out here is the potential for another purple ellipse that has the potential to warrant its own standalone facility, right? So another 2,000 to 3,000 ton per day mill. And those areas here where we've got converging and cross-cutting structures, zones that really could present themselves as dilation zones where you can have blowouts and pooling of mineralization similar to what we see at Copala, particularly up here to the north. In northern Copala here, we've got zones that are up to 82 meters true thickness. 82 meters. I mean, you'd love to open pit that. It's just not a reality currently in Mexico to open pit this. But lots of other targets as well down to the south here. Camellia is a target that we're all very excited to test, and we'll get going on this second half of the year following the delivery of the PEA. And if we look more broadly beyond this, you know, today we made the announcement of another acquisition. It's really extending what you see where my cursor is down to the south here, and then much farther off the page. It effectively doubles the land package that you see here, and it's much earlier stage, but we do have LiDAR survey complete on that district, and we do have some preliminary geophysics. This is just going to aid us in ongoing targeting and help our efforts for the next round of exploration to come.
30,000 meters for pure sort of regional exploration drilling, that is quite a lot. So how would you allocate those meters? Because, I mean, you don't need so many meters to, or how do I say it? If for example, if you would like to test and falsify the hypothesis of Camellia having high-grade mineralization, yeah, how many meters do you think you would need for that?
Yeah, that's a really good question. And the reality is, in this district, these types of systems, epithermal vein-hosted systems, you have a degree, and this is not just related to Panuco, but this goes for San Dimas, this goes for Las Chispas, this goes for Cerro Los Gatos, or even Juanicipio. These projects, these deposits, have a degree of pinch and swell to them, so their thicknesses ebb and flow, as well as where their higher grade mineralization is. Typically, we call them chutes or feeder zones, because epithermal means, you know, you're close to surface, but you're dealing with hydrothermal fluids and the meteoric waters, which is your surface and groundwater that's interacting. And so it's really, you've got a boiling horizon and you've got an upwelling. And these feeder zones, or this plumbing, is typically where you have these high grade sections, localized sections. And so when you can get on these sections, you're great. But if you're not on one of the sections, you don't know if it's just right next door. And so that question of how many meters does it take, I wouldn't say it's meters, it's more or less drill holes. It takes about 10 to 15 drill holes per target before we can do this or this, right? You're kind of in this limbo here. And La Luisa is a prime example of this. I've actually got Luisa, I've got Luisa right here. And we just put out our maiden resource on Luisa this January. We'd completed over 45 holes before we announced, the resource. And we completed close to 20 holes before we had even really published anything on it, because we weren't certain if it had legs. You can have, there's so much mineralization in this district that, you can tag into something, but before we know if we have, some extent laterally or depth, we have to test that geometry. And so a minimum of 3 holes before you can do anything, but it's closer to 10 to 15 holes before we know if it's a target that's worth really putting our shoulder behind.
Okay, makes sense. But then, so if you just look at the Panuco-Copala sort of project, and we exclude all the regional exploration, so where do you see most potential for expansion? And if you want, you could flip between the different La Luisa, Copala, and Napoleon, and show where you think they have most potential for expanding in the upcoming, in the next MRE.
Okay. Well, I'll go back to orient. I think it's a bit easier on this slide just to orient yourself. So you can see this is again that 4 kilometer ellipse. This is again all of the resource drilling last year was completed in this ellipse. All of the drilling completed thus far this year has been completed within this ellipse. And this ellipse is where the PEA is going to be centered. Again, we do have these small satellite resources. It's about 7 million ounces silver equivalent combined. We're not focused on expanding those right now because everything's about de-risking and putting these ounces into production. And you can see how close they are to one another. It's fantastic to put infrastructure smack dab in the center. So when we talk about these primary structures and where we see the most growth, well, Copala and Tajitos and Cristiano, they're all owing to that down-dropped block I mentioned. So preservation of mineralization and precious metals dominant. In fact, we break them out here in the resource table as well, the Copala area and the Napoleon area, or the NP area. The Napoleon area, which includes Josephine and La Luisa, as well as some smaller other structures like Cruz, this is on the uplifted block, hence why we have a higher degree of base metals, right? So when we look at the growth that is year over year, Copala has been the big driver, not only in terms of grade, but of course ounces. When you've got a 10-meter wide structure that is running for, close to 1,800 meters in total strike length, ounces add up very, very quickly here. And so you can see it's open in each direction, to the north and the south along strike. It's also open down dip. It's dipping towards us here, so into you, out of the screen and into you. It's dipping. But at about 500 meters to the east, it's actually cut off by one of the uplifted blocks. And so one of our theories was, well, maybe we've got potential to chase this mineralization that has been uplifted and have Copala style mineralization closer to surface. We've unfortunately encountered more base metal values than we anticipated, which would indicate that we're higher up in the system, right? And therefore, it's not necessarily our focus today to be chasing the more base metal rich values. And so expanding along strike for Copala continues to be a major focus, as well as at Napoleon, chasing some of these splay structures that are further towards the southeast, and both going perpendicular into the footwall and the hanging wall.
Splay structures, because you're seeing that at Copala too. What is a splay structure?
Yeah, great question. I don't know if I've got let me see if I've got a cross section here. This is probably the best we can highlight here. So a splay structure is typically when you've got your one main vein that comes to surface, you can have offshoots of that vein that might not propagate all the way up to surface. That's what you're seeing here. You're seeing kind of stringers that come off of the main pulse of mineralization. Also, as we come into the south here, so this is the section that you're looking at, the cross section itself, it appears to be running A to A prime right through here. You can see it over here at Napoleon, and this is what I was just highlighting at southeast Napoleon, where you've got structures that are going further into the hanging wall or the footwall. So on each side of the main structure, that's where you can get these splay veins, right? Sometimes they call it horsetailing. They can call it all sorts of things, but what you end up having is multiple secondary structures that are of high significant grade. They're often just more narrow. And so what we have here is our main vein as well as a host of narrower high grade splay veins.
Okay, that makes sense. We can continue with where you see most sort of potential for expansion.
And so outside of what we see at, call it, Napoleon Main and those splay structures, I think the Louisa has all the hallmarks for a considerable growth. When we look at what we've done already, in about 12 months' time, if you squint, it's tough to see, but there's a dark gray outline here. That dark gray outline represents the current resource base at Louisa. So it's about, I think it's just shy of 30 million ounces of silver equivalent that we've put together in 12 months of drilling. You can see how long, actually, let's just double check. Yeah, so it's 30 million ounces combined. You're looking at, call it 1,600 meters of total strike that we've outlined, but there's a nice 400 meter gap here. The key component to all of this is this structure. It follows the exact same orientation as Napoleon. So if we go back to Napoleon deposited horizontally and then has been tilted slightly to the south. And that's why you see this gentle plunge. Over at Louisa, it follows the exact same orientation. Well, we know that Napoleon's about 3 kilometers long in total strike length. And what we've identified to date at Louisa is about half that. If we're marching and following the exact same orientation and plunge, which is what led us to drill closer to surface along trend, and we hit mineralization, well, that means that we still have run room chasing it up to the north as well as down to the southeast. Our only issue that we're running into to the southeast is, go back to my early comments about man-portable rigs. Our drill rigs have a depth extent to them, and we're starting to reach that with topography. If you combine our topography here, as well as the overall vertical extent, you're getting close to 600 meters vertically here in topography, and of course your drill length. It's becoming challenging to continue to explore Louisa at depth. So Louisa, we're going to chase it up to the north, and there's easy resources to add here as long as continuity remains. Once we get underground, we can really start connecting the dots more cost effectively here, particularly to the south of Louisa. But I see tremendous growth coming from the Napoleon and Louisa area, particularly Louisa, as it just hasn't been delineated. It's still very immature from an exploration perspective. But Copala, given its broad thicknesses and high grades, it's still open to the north. It's still open to the south. That is where you do get the most bang for your buck, right? Because again, ounces add up very quickly when the structure's grading over, combined over 500 grams per ton silver equivalent, closer to 7 grams per ton if you wanted to look at it in terms of gold. That's running 1,800 meters long at 10 meters wide. That's the key, 10 meters wide. So every single hole has the potential to add significantly to the resource base.
Excellent, thank you. And one thing I would like to ask you, and we can see this here, that the inferred grade is in generally lower than the indicated grade. Does that mean that we should expect a a lower indicated grade once you complete further infill drilling, or
No, we've actually, it's responding very well to our drilling. So this resource, which was published, I want to say January 8th of this year, it represents a material increase to the previous resource statement, which was 12 months prior. The overall resource base grew by about 50% in both the indicated and inferred categories. That's contained metal. The overall grade profile stayed the same, but through our infill drilling, we were able to improve the indicated grade by about 17%. So you saw conversion from inferred to indicated, because we converted almost 50% of the inferred global resource into indicated and added about 50% new ounces, right? So in each category. So not only was it a home run in terms of conversion drilling through infill, but also a home run in terms of expansion drilling by adding new resources. But your question of conversion and grade, this is responding exactly the way you'd want it to. You've got pretty broad space drilling. We do 100-meter spacing for our inferred classification, 50-meter spacing for our indicated classification. As you can see, we don't have any measured component currently. When we reduce that drill spacing, and you're seeing an improvement to your overall grade profile by 17%, that's an indication that you have high grade continuity, right? That's exactly what you want to see. You don't want to see that grade going down. Otherwise, you'd say, okay, well, this is potty, and you don't have a handle on where your high grade centers are. This shows us, when we see that excellent improvement to the indicated in particular through conversion, that we are demonstrating really good mineral continuity, particularly in these higher grade zones. So it's a really good plug, and we didn't see the inferred grade go down. In fact, we saw it stay in line with what it was previously. So that just is telling us that tighter space drilling is needed to really mechanically improve that grade profile. And the last point on the overall, call it, distribution of mineralization and grade within our resource, we don't have the sensitivity table highlighted, but when we highlight our project in terms of cutoff grade sensitivity, so changes in your cutoff grades and what that does to your overall tonnage, grades, and ounce count. Well, as you move your cutoff grade higher, right, to capture a higher grade resource, what we're seeing is our grade improves by almost 20 to 30%. If we go from the 150, which is what we're stating this at, up to 250 grams per ton cutoff, we're seeing about a 20 to 30% improvement in indicated and inferred respective grade. And we're only seeing about a 10% reduction in metal. So really, I think a hardy way to look at this is Juanicipio. Look where we are right now at the 150. Imagine moving to the 250 number, which is more reminiscent of your mining cutoff grade, because we have to cover dilution based on mining method, and we have to cover development costs that's required to get to that mineralization. And so if you look at Juanicipio, a 30% improvement to your grade and a 10% reduction in your ounces, you're starting to look a lot similar to what Juanicipio was before they announced their recent technical update. And that's exactly the way you should be thinking about this project, is rivaling the likes of some of these billion-dollar valuation producers.
fantastic. Yeah, and you got the same man who discovered the Juanicipio vein on
That's
YouTube.
right. We've got Peter Megaw as an advisor. An excellent addition.
In terms of assay results, what could we expect for the next couple of months?
Yeah, the next couple of results you'll see are largely infill, a few extensional results focused in the Louisa, Napoleon, and Copala structures. The name of the game, again, for Vizsla right now is de-risking in advance of the PEA, delivery of the PEA, and then moving forward in advance of the feasibility. The company as a whole is in a bit of a transition phase. We were in Explore, and now we're transitioning into a developer. And so the next round of results, next few rounds of results you'll see are going to be the remaining infill and extensional results that we've got. The turnaround time for assays is quite quick for us because we drill so much. In the last 3 years, we've drilled almost 360,000 meters of drilling. So it's about 2 to 3 weeks turnaround time for assays right now.
And then, so are you going to publish an updated mineral resource estimate before the PEA, or?
No, we won't. We won't do that before the PEA. You're not going to see any new drilling go into the PEA since the cutoff date for inclusion in the resource that you're looking at currently on this page. The data cutoff for this resource was September 1 of 2023. So for context, every bit of drilling that we've done post September 1 of last year is not going to make it into this economic study.
So in the Panuco district, what is the potential of it?
Well, historically, the Panuco district sort of breaks down into two styles of mineralization, one of which is silver dominant, and the other is silver dominant with a very strong gold credit. So what was the old Copala district, which is on the west side of the overall district of Vizsla's property package, which is where the Napoleon vein is, where most of their exploration success has been in the western part of the district, mostly because that's where they've spent most of their time and effort. And then it goes all the way across the silver dominant zone. And then when you get to Palos Verdes, where Prismo has their property, which is completely surrounded by Vizsla, they had it before Vizsla even came into the neighborhood, we see the gold kick back in again. So it's clearly a long-lived district with a lot of different events going on. Chasing the high-grade silver gold zones make a lot of sense because, of course, gold pays you very well. But what has been learned through the exploration of the Napoleon vein, which just barely cropped out on the surface, and recognition of the alteration associated with it and the structural style, several additional parallel, what we think may be repetitions of that vein have been lined out by the geologic team, and we're very excited about being able to get some holes into them as soon as we can.
What are the most effective ways to identify sort of drilling targets with regards to epithermal silver gold systems?
Well, the most fundamental thing that you look for in exploration for epithermal veins is structure. That's the plumbing. That's how the fluids move through the system. And so you look for where you see those structures, their faults, their fractures. They pump the ore fluids along them. The metals that we care about drop out at some distance below the surface, but the fluids are still reactive, and so they do a lot of alteration to the surrounding rocks. And you drive through the Panuco district and you see one zone of alteration after another associated with these structures. And it's been recognized that there's veins that haven't been exposed by erosion, but the alteration has. And so now it's a question of simply inventorying all of those structures with the strong alteration and try to get a feel through surface detailed geochemistry where the ore shoots are within those veins. Because ore shoots, the veins are not just sort of continuous panels of mineralization in most districts. They're concentrated at places where those big regional structures have a little bit of a flexure in them. And so where they change direction with fault movement, that creates open zones. The fancy word for that is dilatant zones, which just means an open space along the structure where the ore fluids can move and dump out the goodies that we care about. So first thing is to identify the structures. Second thing is to look at the alteration, figure out where that's strongest and it has the best geochemistry, and where that coincides with these inflections in the veins. That's where you at least set up your first hole.
Are there any methods of geophysics that work well for epithermal systems?
There's a number of geophysical systems that work. Magnetics, magnetotellurics are the ones that are used the most. And those work very nicely to help you block out sort of the basic framework of the district. In other words, big structures tend to show up pretty nicely in those. You're not going to detect the mineralization directly, so you're using geophysics to map out the framework under the cover of the younger rocks that are there, that just mask certain portions of the district. And that can be everything from dirt to young volcanics to rocks that for one reason or another just didn't show the alteration. They didn't alter as much as some of the others did. But you're looking for recognizing patterns of why the existing veins or the known veins are where they are, and then you look for repetitions of those patterns and those features in places that haven't been drilled yet.
And then I assume you probably that was probably what you mentioned in your first, but following the old timers, because there are a lot of historical workings on Vizsla's properties.
There are, and it's actually remarkable how close some of these untouched veins are to the existing historic mining workings. In some cases, if the old timers had simply decided to go sideways as opposed to following the structure, they would have found these parallel structures and mined them out hundreds of years ago. But fortunately, they didn't think that way.
Are there any targets on your regional property that you are more interested in?
Well, there's a number of them. Probably top on the list with my Prismo hat on is the Palos Verdes vein, where we have a number of holes that have given us some very good high-grade silver gold numbers. 100 grams gold isn't bad to get out of a drill hole. We did that at one point. But everything says we're very high there and that the vein is actually offset by a post-mineral fault. So we have to go deeper there, and that drilling is all teed up and ready to go. Once Prismo finishes their current financing, that's where that money will go. And again, it's an example of the cooperation between Prismo and Vizsla, that the collars for those holes will actually be on Vizsla property, but the target that they're going for is on the Prismo property. The other thing that the project geologist just walked me through 3 weeks ago when I was down there is a series of targets parallel to the Napoleon vein off to the west. And these are very high-level looking targets just in terms of what you see in terms of alteration, but the alteration is very strong. The structures are going in the right direction, and they're very easy targets to drill. So those are pretty exciting looking. And I'm not saying that there isn't lots of potential around what they're already doing, but what I like to see made is new discoveries, whole new veins that haven't been hammered before. You know, once we can put a pin or two into one, we can turn it over to the guys who just want to drill them out. But I want to find the new veins that will add substantially to the perspective on the district.
Could you explain the terms of the recent acquisition of the Garra-Metates district and also the rationale for it, and payment schedules, etc.?
Yeah, this was one that, it's funny, just to give a little bit of background to, Sinaloa, this area of Sinaloa, it's not an area that has historically seen a huge amount of exploration. But if you go back long enough in time, it's an area that the Spanish were very active. And at one point, a very high percentage of, of the silver and gold that went back to Spain from New Spain was coming from this region of Mexico. So there's all these kind of hidden or forgotten Spanish mines. And when we spent a lot of time in Sinaloa working, on Panuco, we started to hear about this Metates La Garra district, and it sounded like kind of a bit of a legendary project. And so over the years, we kept inquiring about it. And it turns out that there was some ownership adjustments that allowed one of the more difficult owners to be able to transact on the project. And so we jumped on that, and we sent our team to do a site tour, and they picked up on 2 structures that basically look exactly like Napoleon, 3 meters thick, 4 meters thick, running for 2 kilometers, some small mines on them. So, right now, from what we can tell, it, very possible it could be, 2 analogs to Napoleon. And then we also saw the potential, actually, examples of flatline structures, like I mentioned at San Dimas, and like we have at Copala. Now, interesting part is that this project is equidistant, 32 kilometers north of Panuco and 32 kilometers south of San Dimas, has all the same type of mineralization and expression as both of these projects. So we're thrilled about that. Now it's a little bit more remote. It's not off of a highway like Panuco. San Dimas is quite remote as well, so that's pretty typical for the area. And we were able to pick this project up for, I think, quite a reasonable acquisition cost here of about $3 million US dollars and 5.5 million shares of Vizsla, and that's over a number of years. So really, quite a reasonable price for us to pick this project up. Really considering that we had to spend much more than that to acquire our Panuco district originally, and we think that this is some of the best ground, in the silver business. So it's not something that's going to really change our business plan in the near term. It's something that we look at as, we have a unique ability and skill and technical knowledge of this district of this, I should say, silver belt, the Sinaloa silver belt. And we saw an opportunity to pick this project up here and add to our pipeline. So as we continue to drive the project into cash flow, when we're cash flowing, we have a pipeline project that we can continue to explore and show further growth out of.
Excellent. And so if you could give a quick overview of the exploration work that has been done, and if there's any data from all the past producing operations there.
Well, we've done some sampling ourselves, and those numbers come back in the in the kilos over good widths. A couple of meters at I think 1,200 grams silver equivalent. But what we see that we really like there is that there's a good amount of ground that's just mineralized. Whether it's 400 grams over a couple of meters in terms of sampling, or a couple of kilos, it just gives us the ability to vector into the potential for new mineralization by using old new mineralization sampling. So, that's what happened with us when we first got to Panuco. The numbers actually weren't all that astronomical. We'd be doing surface sampling of a couple 100 grams silver and 4 grams gold, or a couple 100 grams silver and 2 grams gold. We drill underneath that and we discover something that was much richer. So, at Metates La Garra, it's helpful just to see a huge amount of mineralization all over the place, and then a lot of evidence of historic mining, which is going to help us vector into new discoveries.
I take it this year's exploration plan is really target generational work. You will probably be doing some geophysics.
Yeah, exactly. It's not, we have a set budget, and our plan for 2024 is to drive the core project Panuco forward. But what we can do, that's cost effective at La Garra-Metates is, get ready for that drilling, and that's through sampling, mapping, prospecting, electromagnetics, these types of things. And by doing that, we give ourselves a higher potential of hitting on the first drill hole, as we continue to drill, which of course, no exploration company hits on the first drill hole. It's something that we look to do a campaign in the future. But we want to increase those odds as much as possible.
Do you see yourself drilling next year?
It's a good question. It's something that we really need to get to the bottom of soon, but I can't say for certain that we will drill next year.
Okay, and then so are there any royalties on it?
Yes, there'll be 3% royalty on the property.
What do you think the average mining dilution would be?
Well, it's a bit early for us to say this. I'd say hand on heart. We what we've looked at here and probably in similar scenarios would probably be about 15, maybe to 20%, but 15% I think is possible for us here. And that has to do a lot with the unique structures that we have here. So, typically in Mexico, what you'll see is, many of these small narrow vein producers would be mining something that's a meter, maybe it goes down to half a meter. And if they're lucky, it goes to 2 meters thick, right? It's pretty challenging mining. You get a lot of dilution when you mine like that. Similarly, the grades, maybe 100 grams to 200 grams if you're lucky, maybe 300 grams silver equivalent if you're really lucky. At Vizsla, Napoleon, our structure is one of the major structures there, was the first that we discovered. It runs for 2.5 kilometers, and it's 3 meters thick on average. There's some areas that blow out to 10 meters thick, but on average, this is a 3 meter thick structure, and it's quite continuous, throughout. And it carries nice grades, over 400 grams silver equivalent there. That in itself is an incredible structure to mine. It's subvertical, nice and thick. So you don't see a lot of dilution there. You don't see as much as you would in other places. Now, going over to Copala, Copala is even better than Napoleon. And this is kind of the signature of this district. And it's actually the same as what they saw at San Dimas 100 years ago. 100 years ago, they were mining these flatter lying structures that were very, very thick. And that's why San Dimas became such a rich mine so quickly. And, so many, great owners had it over the years. So what we discovered was a barely subsurface Copala structure that's flatter lying. Now, on average, it's 10 meters thick, but at the north end of Copala, it's 80 meters thick on the discovery hole. And the grades are spectacular. That 80 meter thick structure there, I think the average grade was about 250 grams silver equivalent over that 80 meters. And then in some areas, the grade spiked to 2 kilos over 4 meters and things like that. Just treasure box type stuff. As you step south from there, still flatter lying, but 10 meters thick on average, and the grade is well over half a kilo.
What is your average all-in finding cost per ounce of silver equivalent?
So, for us to find an ounce right now, as of the last resource, was about 32 cents an ounce. So very competitive. If you think about, what an ounce is valued at for us, it's about 3 times that in terms of enterprise value, 3-4 times the cost for us to find it. And then, of course, finding an ounce for that little, mining it for hopefully, well less than the average AgEq in Mexico, and then selling it for these prices right now. It's a very compelling business model.
So the Napoleon area that, as showcased in the presentation, it contains low grade lead and zinc. Do you expect to be able to recover that, or will you just opt for producing gold, silver doré bars?
So, what we're looking at right now is likely a doré product, and that's similar to San Dimas. The base metals, we could look at potentially recovering them perhaps in the future, but our flow sheet that we that gives us the best return on investment, and that's really what drives this is the return on investment is doré.
And then, so what's the timeline, and how much underground development will you perform in the second half of this year?
So as far as timeline goes, timeline's really focused right now on, again, delivery of that PEA. If we just go back, I guess, well, this is actually kind of a good spot. Timeline for the year is to focus on this PEA delivery, call it end of June, early July. At that point, we're really going to get going on these 3 initiatives. I mean, we've started the optimized MET. We had started the initial design phase of the bulk sample test mine, but we've taken a pause on that to make sure that the PEA is done accurately, correctly, and all hands on deck, because this bulk sample test mine is going to support the PEA. We want to make sure that we pick the adit locations correctly, that is optimal for the economics, right, and the overall mine. So when you come to the timeline, of course, PEA delivery, then marching through these key de-risking initiatives. Bulk sample test mine, we've been permitted for the extraction of 25,000 combined tons from Napoleon and Copala. The schematic that you're looking at here on the left side of the screen is a plan view of what that development could look like. So we've estimated about 4 kilometers of total combined development to get to the bulk sample locations. Again, this is rehabbing historic workings, going under. We want these historic workings or these adits to then be primary main mine access for us. So that's why it's so important to get them right the first time. And so the focus again this year, though, we're going to take a step back from Napoleon and focus just on Copala as we want to be judicious with this capital. It's not a terribly expensive program as development costs are quite cheap in Mexico. But right now, the way to be thinking about the second half of the year in terms of development, it'll probably be less than 1 kilometer of underground development is actually completed within the calendar year here of 2024. But that's okay because we're still focused on a lot of design elements. The second part of the de-risking initiative is this tight space definition. As I mentioned, that's still ongoing, and it's going to focus largely and is focusing largely on Copala. But there's going to be some that does complement this test mine. So as we get further underground and are starting to advance along the stopes, that's when we'll want to have that tight space drilling that can guide that development. And then lastly is the optimized met. So the flow sheet that we envisage currently is the one that you see here on the bottom left corner. We have completed 3 rounds of metallurgical test work to date, starting with Napoleon, which is where we made our first discovery, and then Tajitos. Now, recall, Napoleon is where we encounter those base metal values. It sits on that uplifted block. So Napoleon, when we first did the test work, we did incorporate a flotation circuit. Flotation is really good at capturing, your precious metals that are within and your base metals that are within a gangue mineralization or gangue material here. And then, of course, your cyanide leach is better suited to just that precious metals dominant mineralization. So using Napoleon's test work and then building successively off of each next test program, Tajitos, finally Copala, and we announced this in September of last year. You can see it incorporates both the flotation and cyanide leaching of the float con and the float tails, right? So you're getting the float concentrate, you're regrinding it, and then you're leaching, and then you're also doing the tails that come off of the flotation, and you're leaching those to produce a doré. And that's the important part here, is we're focused on producing a precious metals doré. That's not producing a concentrate. So San Dimas, this is exactly what they do. This is actually the same flow sheet that Silvercrest used initially at Las Chispas, but they don't have the base metals, so they've eventually dropped the flotation circuit here and are getting amazing recoveries just using the leach circuit. So
what recovery rates do you expect for silver and gold?
Yeah, I can give you a range. We're going through that with Asenko, who's doing our PEA now, but on all of the test programs, we've returned mid to low 90s for all metals. You're getting a bit of a higher payability when it comes to gold, as you typically do, but overall, you can expect recoveries in that range, so call it mid to low 90s. But the flow sheet that you see here is what worked at Copala. We now have to go back to Napoleon, Tajitos, and the other primary structures and ensure that they are amenable to this flow sheet, right? Because again, we do have that base metal component. We're quite confident that this flow sheet is amenable to these other structures, but that is part of this optimized metallurgical program, which is a phased program. And so right now we've got test work ongoing that's still investigating representative samples from Copala, but we've got Louisa samples that we'll have to test. And then we need to go through the variability testing. So really understanding the different lithologies, the different hardnesses, and making sure that metallurgical response is also suitable. And then going that next step further for the design-specific testing with our actual vendors. And so all of these, it's really important to note that all of these, and I know your question was how much development in 2024, but the reality is not a lot of development, but a lot of de-risking work. And all of these are going to span the entirety of 2024 into 2025, and these will complement the feasibility. really all of these, the results from the bulk sample test mine program will feed into the feasibility, reconciliation of our resource. So we're confident that what we think we have is actually where we think we have it. Obviously, the tight space definition drill program on 12.5 meter centers is really going to highlight your spatial distribution of your mineralization. So we know, again, where it is in space, how much development we need, how much ground support, of course, the pumping conditions, ventilation, all of these very, very important things. And of course, also set us up for that reserve delineation. And then beyond that, as mentioned, is this MET program, where all of these results, we're far beyond what your typical PEA would have as far as metallurgical test work, with 3 rounds already been complete. But that's the way we like to do things. We're likely going to skip the PFS stage, given the amount of engineering and metallurgy we've completed, and just go right to the feasibility. But again, this is going to be dependent on what does shake out of the tree in terms of our detailed engineering and the overall economic study coming out in the PEA.
What mining methods are you contemplating for the deposits?
Yeah, that's another good question. So there's 2 mining methods that we're investigating right now. It's looking like long hole stoping and selective cut and fill. I'm not sure if it's overhand or underhand on the cut and fill, but areas of Napoleon here, we do have some anastomosing faults, where faults, they kind of come in and come out of the structure in a few areas. Those particular areas we will need increased ground support, and you'll want to do selective mining. So it minimizes your dilution, but it costs more money to do this type of selective mining. And on the other hand, at Copala, where we've got very broad widths, you can do more bulk tonnage mining methods, such as long hole open stoping. And so that's exactly what we'll do. You're probably looking at 80% long hole, 20% cut and fill at this stage. But again, that's what's going to come out from the PEA here. Once we've got a much better sense of the sequencing and the detailed engineering, it progresses.
How is it looking with the mine sequencing? I mean, will you start mining on Napoleon and Copala simultaneously, or?
That's the $1 million question. That's exactly what the trade-offs are going on right now. So I'll give you 3 scenarios. And I'll preface it with this context. We know that we've got the highest grade mineralization north of Copala, so the northern end of Copala. I mean, I know this is Tajitos here. Cristiano is an incredibly high grade structure, but narrow. And then you've got Copala as it goes off to the north. Incredibly high grades, very broad widths, and most importantly, it's right at surface. I'll just jump back actually quickly to show where it sits in space. This is where I'm talking about, just very high grades, up to 82 meters true thickness, and it daylights at surface, or just about 10 meters below surface. So that type of area is very important to initiate mining, as high grades early in the mine life drive your economics, right? And this is all present value of money, right? So when we look at our potential options in terms of sequencing, well, you want to capture that high-grade mineralization at Copala right off the bat, but it's a roughly 2 kilometer long structure. Could we also approach it from farther down south? Well, yes. Could we also do the same thing at Napoleon? Maybe have a southern and a northern. Is it one access at Napoleon and one access at Copala? So these are the types of trade-offs that we're thinking right now. Is it 1 Copala, 2 Napoleon, 2 Copala, 1 Napoleon? It's really going to determine, how many faces that we can open up. And so this is, defined by what your ground conditions are, how much ground support you'll need, how close we are to certain areas that are bulk tonnage versus selective. All of these things come into play. But I can tell you the throughput that we're looking at is closer to 2,500 tons per day to start as a minimum. And when you're talking about that level of throughput, it's pretty clear that you'd likely have Napoleon and Copala being mined simultaneously, but I don't have the definitive answer for you yet. That'll have to wait until the PEA is delivered.
Give us a ballpark range of the expected throughput and also production levels in the first couple of years.
Yeah. So we're targeting a production profile of a minimum 15 million ounces per year, which is considerable. That would put us in the top 10 largest silver mines on the planet if we were in production with that production profile. Originally, our goal was 10. Then the goal became 12 million ounces. And now we're up to 15 with a stretch target of 20 million ounces per annum. These are big, big numbers, right? So that's what our production profile is targeting. In terms of numbers, I mentioned the throughput capacity initially is around 2,500, but it could be higher. Again, we have to wait and see. An initial capital outlay, I have to provide a range here, but somewhere around 200 to 300 million US is our initial capital outlay. So a very tolerable capex number for a production profile of this size and a throughput capacity for the plant of this size. I'm challenged to find another corporate that has, at our stage of an advanced explorer, early developer, that has a market cap higher than their potential initial capital outlay. Most companies at our stage are looking to raise 2 to 3x their market cap to drill, let alone finance the entire project build. And so we're at a very good way with a low capital hurdle here that, given the amount of grade and ounces we're expecting to produce, very well serviceable by debt. And so when we talk about that capital outlay and, call it a 2-year payback period or less, we're going to take on as much debt as possible. If we can go higher than 60-40, we will. 60-40 debt to equity split, we will. And again, management insiders, directors, we own about 15% of the outstanding shares, so we are certainly allergic to further dilution. And then lastly, in terms of all-in sustaining cost, I can quote more of what our analysts are saying right now, because we are well covered by the analyst community. I think we've got eight analysts covering us now. I'm just hopping back up to that number here. Consensus in terms of target price converted to Canadian is over 100% return to current market. The analysts are pegging us somewhere in between, call it $9 and $12 US, all-in sustaining cost per ounce of production. I think that's a fair assessment. I think that it's our job, our duty to remain below half the current commodity. And so if silver's trading at $24, which we know it's trading higher, it's trading at $24, we want to have a $12 max all-in sustaining cost. This is actually called Archie's Rule or Archie's Law. It really just highlights that your project has a built-in buffer afforded by the high grade nature of your mineralization. In that case, if commodity prices are great, you're absolutely hitting it out of the park. And if commodity prices are in the gutter, well, you can withstand that eventuality given your high grades. And so we want to be double what the current commodity is.
How are your relations with the local communities and also local ejido groups?
Well, we're fortunate there. Again, this is a district that has hundreds of years of mining history. It's communities that are miners, in the community. So we've signed 5 ejido agreements for 30-year production, which is almost unheard of for a company at our stage, pre-PEA, in a short few years to be able to do that. So our relations with the communities and the ejidos are all very positive. And, we have the framework with which to go into production now.
Your land lease agreements, are those on the entire Panuco district or just where the first mining would be?
No, it is. It's on the ejido agreement covers all of the concessions that we have. So we have access not only for exploration, but also for production on our entire map.
Then so you're in the state of Sinaloa. Have you had any security concerns?
Well, I can tell you, yes. At first, we were a little trepidatious when it came to going to Sinaloa, and that had to do with this reputation that Sinaloa has. That's only made worse, or probably caused by the fact that every time you turn on Netflix, there's Chapo and Narcos and these types of things, right? And so it's one of these things that really sells, I think, in terms of media. But it also created an opportunity for us because the perception of Sinaloa is so much different than the reality of Sinaloa. And I think if the project had been in Sonora or Chihuahua or something like that, which are actually more dangerous states when it comes to the real facts, probably wouldn't exist in the hands of a company like ours. It's just it would be in the hands of an Agnico or something like that, Pan American. But in reality, Sinaloa is an excellent place to work. We've never had any security issues at our project. We operate there. We've had a very large scale drill program for a number of years now. We operate without, armed security or anything like that. It's actually really just a wonderful place to operate. And the people are industrious. The governments are excellent. And, it's a place that really wants mining to flourish as well.
Yes, but so if we talk Mexico, so Mexico has under the AMLO administration deteriorated, at least, if you mention, measure it by the Fraser Institute's policy perception index. So, but how is it according to you to work in Mexico? And have you had any issues with, obtaining exploration licenses?
We haven't had any issues with, our permitting or exploration. And as a matter of fact, I think that's probably an advantage in Sinaloa is that, it's a place where the state government really wants us to be exploring and to operate. And the communities really want to see us build a mine here. It's also not an area that's extremely dry. It's semi-tropical where you have quite a bit of rainfall, throughout the year. And so it's not a place where we're trying to put a gigantic open pit in a bunch of farmland where there's no water. It's an underground mine in Mexico where you're still able to, of course, to permit underground mines. And if you want silver, and I think, we're convinced that silver is the metal to be in going forward. I think it's massively undervalued and, so important to many aspects of humanity. Mexico's the number one producer of silver. And I'd much rather be in Mexico trying to build a silver mine than, certainly in other jurisdictions that are considered more friendly, like the U.S. and Canada. So I'm very bullish on, the jurisdiction of Mexico.
Perfect. And so, but adding on that, so there's an upcoming general election in Mexico in June, so quite imminent. What is your expectation, and could the outcome potentially affect, permitting timelines and also your willingness to deploy capital?
Well, I've got perhaps being in this industry, it's part of the DNA, I guess, but a bit of a contrarian view on this. And I suspect that actually the sentiment towards Mexico mining is probably the lowest that it will be going forward here. I think that the mining reform will be repealed. I don't think that things will get much worse here for Mexico, and I suspect that the new government will actually be quite positive for the company. At least we'll know exactly where we stand. But underground mining for silver in a place where underground mining for silver has occurred for hundreds of years, I think is going to be a sustainable business. And there's really nothing like mining to bring a lot of prosperity to rural areas. It does, there's no industry like mining that brings, value to rural areas. So, the value proposition that we have to go in and help Sinaloa and Mexico extract their silver and create value for communities and, pay taxes and pay royalties and everything that we have to do, I think is something that's compelling. And I think that the government of Mexico is certainly going to see this, with the new administration coming in later this year.
What royalties are there on the Panuco project?
So right now there's a 3% royalty on about 60% of our concessions. However, we are in the process of spinning out Vizsla Royalty, which will be a company that shareholders of Vizsla Silver will own a fraction of. They get fractional shares for every share that they own in Vizsla Silver. It's something very similar to what Great Bear did. And the intention there is to spin out, this royalty company that'll have a 2% royalty on the 40% of the concessions that are unencumbered by royalties right now, but will also execute a buyback to buy back 1.5% of the 3% that's on 60% of the royalties. It's a bit complicated, I know. It's a bit there's a lot of fine points here, but effectively on the entire property, there will be a 2% royalty on all of the concessions in the Panuco camp, and depending on which concession it is, there'll be a 0.5% royalty to Vizsla Royalty, or a 2% royalty to Vizsla Royalty, depending on the concession. So what we're trying to do is daylight value for Vizsla shareholders by spinning this project out, and also minimize the existing burden of the royalty on the Silverstone concessions.
But so this is a private company held by Vizsla shareholders, and it's led by the management of Vizsla.
Currently private, but it'll be spun out to be a public company.
Okay, but what's the, because obviously there's additional G&A costs by having another public company. And if it just has one royalty, what's the longer term plan for it?
Well, the rationale there is that we understand, our intention and our goal is to maximize value for shareholders on Vizsla Silver by driving this project forward, putting it into production. But we do know that, we're at risk. We consider ourselves to be massively undervalued. And, if you're a large scale silver producer looking for growth, there's practically no options out there. And us being the world's largest undeveloped high-grade silver resource, probably puts us in the crosshairs a little bit. So you want to make sure that because we've only explored 10% of the veins of this district, that the rest of the potential upside and exploration upside for the district gets represented through this royalty. So it gives shareholders another way to have future upside for discoveries, no matter what happens to the mothership, let's say the Vizsla Silver mothership. And in terms of G&A, there's, we talked a bit earlier about, the synergies with Inventa Capital. We certainly know how to run a company with very low G&A. And so, our goal, we'll all be shareholders of the company, will be to minimize, G&A and keep it very, very.
You renewed your ATM program. The option to issue up to $50 million of Canadian dollars of shares, but you never issued a share before through it. So how are you intending to use the ATM program?
Well, it's been such a difficult market that it's almost hard to imagine. But, I think that there is a time coming where there's going to be a huge amount of excitement around, Vizsla. And I think it's management is compelled to keep optionality available for the company. And so, we've never used an ATM in the past. We had it for 2 plus years, maybe almost 3 years historically. And we've just, renewed this ATM program. We never issued a share, on that ATM, but having the optionality in the case where silver spikes $10, over a short period of time, and the price goes up really high, there's an opportunity for Vizsla to access the markets through an ATM. I think it's just good management.
Could you walk us through the timeline of developing the Panuco-Copala project post-PEA?
So, from the PEA, which would be about mid-year, the next milestone would be feasibility study. We suspect that, it's possible to do that within, 12 to 18 months, really. So we want to drive that forward as fast as we can. A lot of that has to do with that test mining and the higher confidence drilling in kind of the core areas around Copala and Napoleon. So it's really informing a higher confidence resource model and then mine planning around it. A lot of that work that we've done already, like the metallurgical testing, the baseline studies, that's all feasibility level work already. But really the goal is to move from PEA into feasibility very rapidly. We also want to secure debt. We think that this project will be one of these projects that can be funded quite reasonably with a high debt to equity ratio. traditional project finance, meaning that we don't need to do forward sales or kind of big royalty transactions and things like that. So PEA to feasibility time is a time where we'll certainly be working with debt providers to explore how that might work while getting permitted as well. But we see really an expedited pathway following the PEA to get into production, and we know that because of the excellent infrastructure of this project, it's quite possible to move that quickly.
Okay, so in other words, at the end of 2025, the feasibility study should come out. And how will permitting play along? And could you walk us through the permitting timelines and also the process? I mean, securing the EIS and etc.
Yeah, so that work has all been underway for months. We've been for years actually. We've been doing all the the baseline environmental work that feeds into the community consultations. And all this has gone into our existing permitting. So it's really an iterative process. But we look to likely submit our permits well before the feasibility study is published. And a lot of that has to do with PEA level work, mine design, mine location, plant design, plant location, footprints there. So, I think by the PEA, we should be in a great place to move this permitting forward. Of course, we'd like to be permitted fully, before obviously, basically into 2026.
Okay, so in other words, the plan is really to in the first half of 2026 to start construction.
That's right, and that certainly working with debt financiers to help us do that.
Perfect. And how long do you expect the construction period to be, ballpark?
It's something that I think could be done certainly less than 2 years. I think 18 months is achievable, and a lot of that has to do with that infrastructure that we have on the property.
But then, so are you developing Panuco with intention of eventually selling it, or selling the entire company, or to operate the mine?
Our goal is to operate the mine. I think if you look at the metal price scenarios that we see right now, I think it'd be fantastic to own a project like this, for the coming decades and continue to produce. But of course, we have to look at what's best for shareholders, and we would look at things on a case by case basis. But our goal is to drive this forward into production, maximize value.
Where do you envision Vizsla Silver in 3 years?
Well, in 3 years, I think we're if not in production, we're very close to getting there. And the market cap and share price reflective of that. We've seen historically with companies like Mag and Silvercrest where they actually achieved very high share prices pre-production. So, I think we'll have de-risked the project through a number of avenues, through the PEA, through the feasibility, through permitting, ideally through debt, and we'll be, like I said, if not in production, very close to it, and many times the share price and the market cap that we are today.